Well, hello, ladies and gentlemen. Welcome to FNA's 15th CBDC broadcast. As always, thank you for joining, supporting these events. Typically, we wait for 2 minutes whilst people jump off calls, but to be honest, I don't enjoy the awkward silence. So I'm going to jump straight into a bit of housekeeping and then we'll go from there. So I'm Anthony, I look after marketing here at FNA. I'll cover some very quick housekeeping. I'll then hand you over to our guests, and then we'll begin the discussion. So, yeah, so it seems the more sessions we run, as I said, we've done 15 of these. The more sessions we run, the shorter and shorter my intro gets. So I don't know at some stage whether I'll just say hi and then hand you straight over to our speakers. So apologies, I guess, to those of you who have joined us regularly, but it's on to the housekeeping as usual. So the CBDC broadcast follows a 60-minute format. Roughly 45 minutes of that will be discussions with the guests, and then we'll have a short 15-minute Q&A at the end of it. If you'd like to ask a question, which I would encourage you to do so, I would just ask that you use the Q&A button at the bottom of your screen. Don't use the chat unless you're just saying hi to the rest of the participants, but if you want to ask a question for our guests, use the Q&A widget, and then we'll try and go through as many of them as we can at the end of the session. Next slide, please. So for those of you who perhaps aren't as familiar with FNA, if this is your first session, welcome. And I'll just explain very quickly what it is that we do. So FNA is an advanced analytics and simulation technology company. We work across 4 core sectors, namely central banks, commercial banks, FMIs, and national security organizations. Next slide, please. So this slide just digs a little further into our CBDC lifecycle solution, which of course is very relevant to this session. Built in partnership with G&D, it actually delivers a very flexible agent-based model of any payment ecosystem. The solution itself actually began its life focused just on the early research and design stage of CBDCs, which gave users the ability to understand the economic and also the financial impact of introducing a CBDC. Since then, we've gone on to develop the solution to cover the whole life cycle of a CBDC, which now allows users to monitor, improve, analyze CBDCs post-launch too. So we have a number of organizations using the solution, including some very interesting work going on with the G7 central bank. At FNA, we believe it's absolutely essential to understand the impact of a CBDC through simulation, before and of course after it's rolled out, hence the lifecycle name. So, on to our discussion. I said I'd be short. I'll hand you over to Dr. Carlos Leon, who works here at FNA as Director of FMI and Digital Currency Solutions. Carlos will introduce our speakers, and then we'll get the discussions kicked off. So Carlos, thank you. Over to you.
Thank you, Anthony. Welcome, everyone. I'm going to present the 2 guest speakers that we have for today. First, we have Robert Mahari. Robert is pursuing a joint Juris Doctor and PhD degree at Harvard Law School and MIT Media Lab's Human Dynamics Group. His work focuses on how technology can and should affect the practice of law by broadening access to justice and increasing judicial efficacy. And we also have Michael Greco, Policy Research Director at the Digital Dollar Project. Michael is the Policy Research Director for the Digital Dollar Project, a non-profit organization dedicated to encouraging public discussion on the advantages and challenges of the potential US central bank digital currency, or as it is normally known, the digital dollar. So Robert and Michael, thank you for joining us.
Great to be here.
If you have any disclaimer or announcement, this is now. If not, let's go.
Yeah, let's go.
Okay, let's go. So CBDC broadcast session number 15 is about privacy in retail CBDCs. And this is something that comes up every time that you talk about a CBDC. Even a couple of days ago, I saw that governor from Florida in the United States, Robert DeSantis, has requested some support from other Republican governors to ban CBDCs in the US because of privacy reasons. So this is a topic that it's coming our way every time. So the overview of the session is that we know that privacy is obviously a part of our life, and obviously it's a critical subject to everyone. Today, there is a myriad of digital forms of money and payment instruments that are available to the public. And we all know that those digital forms of money and payment instruments affect our privacy in some way. Retail CBDCs, as a new form of money, could affect our privacy too. And it's rather clear that the adoption of a retail CBDC could be affected by how privacy is embedded as a design option. Today's session, we're going to have Michael Greco, and we're going to have Robert Mahari, and we're going to explore together privacy in the context of digital currencies and retail CBDCs. We will define privacy in payment systems, consider the role of trust and technology, and discuss the potential limitations of the current privacy protections. We will examine different approaches to privacy and how the discussion about a two-tier retail CBDC system could bring us closer to the privacy levels we all have today while ensuring compliance with anti-money laundering regulations. The main idea is to have a very, very productive and enlightening discussion with these two prime speakers that we have today. So Robert and Michael, thank you once again.
Thank you.
So let's start with the ice-breaking question. Can you both tell us a little bit more about your current work in the retail CBDC and privacy field? Let's go with you first, Michael.
Sure. Thanks, Carlos. It's great to be here today. So as policy research director for the Digital Dollar Project, I work to lead DDP, our research initiatives, our policy initiatives, our writing, and how we explain and educate policymakers on the advantages and challenges of a US CBDC or digital dollar. So DDP was founded in January 2020 when the United States was even further behind in global CBDC developments than it is today. DDP was founded to catalyze the conversation, to move it forward, and to kind of combine think tank work, research, reports with real world experimentation through pilots that test in a simulated CBDC network. What are the advantages and challenges of a digital dollar, and how would a digital dollar affect the US economy and individuals? So we have been front and center of US CBDC discussions. We're a non-government organization, but we do coordinate closely, and we're very transparent, and we seek to partner with the US government and be a resource. So in our talks with the US government over the last few years, privacy has emerged as the #1 issue for retail CBDCs. Last year in January 2020, the Federal Reserve Board issued a public consultation on central bank digital currency, seeking public feedback on what the general public sees as the risks and benefits of a digital dollar. I read that over 70% of the respondents focused on concerns related to privacy in the context of a retail CBDC. I know similar research has been conducted in the Eurozone related to a potential digital euro, and concerns about privacy around the globe, and it's certainly not a uniquely American issue. Recently DDP has focused heavily on privacy. We're convening a series of privacy roundtables this year in partnership with research universities as part of an effort to create requirements for a retail digital dollar that maintains privacy. So we're convening leaders in academia, nonprofits, business, and the government to assemble sort of a checklist and a technical roadmap. What are the technologies that could be used to ensure that any retail CBDC maintains privacy? And what are the policies? What are the legislative and regulatory choices that must be made to ensure that there is potentially a cash-like level of privacy for retail CBDCs. So we've been very proud to partner with the Massachusetts Institute of Technology, or MIT, on our first privacy roundtable, which we held last month. And my co-guest, Robert Mahari, we were very fortunate to have as our moderator. So with that, I'd be happy to turn it over to Robert.
Thank you.
Super. So as you heard in the introduction, I'm doing a JD PhD, and really at a high level, I mean, the research that I'm engaged in at the Media Lab is focused on what we call computational law. So how the law can start embracing AI and other kind of technologies to improve, right? It's a somewhat arcane discipline, and so we're quite excited by the general promise of technology and the law. And then specific to digital currencies, we view the ideas of smart programmable money and things like that as an opportunity to embed regulatory objectives, whether that's anti-money laundering, privacy, financial inclusion, in the money itself, right? So we call this kind of regulation by design. And we wrote some pieces that are linked on how you can start designing a digital currency to be kind of inherently resistant to money laundering. So rather than having a surveillance kind of monitoring approach can we embed the regulatory objectives in the design itself. So that's kind of what we're excited about. And in addition to doing research, we work quite closely with public and private institutions to lead discussions, to convene discussions around these topics, figure out kind of what are the main objectives and pain points. And then also occasionally we'll prototype solutions and put those out into the world. So really excited to be here and excited for the discussion.
Thank you, Robert. Thank you, Michael. So let's go with the first real question. How would you define privacy in the context of payment instruments and systems? Like a second part of this is, are there any potential risks to privacy that are unique to retail CBDCs compared to traditional payment instruments? Let's go with Robert.
Sure. I like this question. So, in a sense, like there's no such thing, or I would argue there's no such thing as kind of complete privacy when we're using money of any kind, including cash, right? So when we're traveling or when we're transacting with large quantities of cash, there's kind of limited privacy. And what I mean by that is that there can be requirements to disclose who we are, what we're doing, why we have, a bag full of cash on us at the airport, things like that. And so really, it's not about, at least in my view, it's not about complete privacy and anonymity. It's more about minimizing surveillance and kind of making sure that the type of data that we share, the types of insights that we share are limited in scope, kind of this idea of data minimization. How much do we really need to share to ensure that, anti-money laundering can function without oversharing, and then also making sure that whatever data we share for one purpose isn't then also used for another purpose, right? So if I'm disclosing who my employer is for the purposes of like a KYC onboarding process, I don't really want that information to then be used to sell me additional products or things like that. And so then the question was, what are the risks compared to traditional forms of payment? And it's interesting because it could really go both ways, right? On the one hand, there are some interesting technologies that allow us to reduce the amount of data we share while achieving the same objectives with digital currencies, right? So we might be able to minimize the amount of data that has to be collected as part of like a AML onboarding process. On the other hand, the fact that all of this data is digital in nature and coupled with the potential to have much more accurate representations of all of our transactions, transaction ledgers, depending on how you design things, you could imagine a CBDC system that is much more invasive than the traditional system. And we'll talk about this later, I think, but it also matters who the custodians of the data are, right? So right now, we share data quite freely, surprisingly freely, maybe, with financial institutions. And those tend to be kind of these fairly large, fairly well-regulated bodies, but see, the news recently. And so the question is, like, in a future world where we have CBDCs, what kind of entities would we be sharing our data with? And we're at MIT, we're quite fond of the idea of having intermediaries whose sole function is to be kind of custodians, trusted custodians of data, and to kind of create this intermediary layer between the financial institution, the regulator, and whoever needs to have access to insights and the person who's collecting the data. And see if we can, for example, with zero knowledge proofs or some other kind of, credentials, portable credentials, minimize the amount of data sharing and, really kind of make sure that the data stays in one place as much as possible and doesn't leak too much. So that was long-winded, but I hope insightful.
That was very good. Michael.
Sure. So I think in the context of payment instruments and systems, privacy really boils down to control over one's personal information. It's kind of a condition when you have financial autonomy, the power to control, who has access to your personally identifiable information, especially in reference to your payments and transactions. And then this control is consistent with your interests and values. Ultimately, people are more comfortable in the United States, I would argue, sharing their data with the private sector. I think in the United States, we do not have a national comprehensive data privacy law akin to Europe's GDPR, nor is it coming anytime soon. But in the context of retail central bank digital currencies, I think that the design is what matters. And so theoretically, a retail CBDC could pose new risks to individual privacy, could pose enhanced risks, but it's all about the design. Robert mentioned zero knowledge proofs among the many technologies that could be used to avoid trade-offs between privacy and law enforcement and security, to give law enforcement the information that they need without revealing anyone's personally identifiable information, and really amending the surveillance state, because we need to balance, of course, privacy with security. I think that there is general agreement on that, but I do think that the introduction of retail CBDCs do offer an opportunity to allow people to rethink the current privacy status quo and maybe reevaluate the level of autonomy and power they have over the sharing of their own personal information, especially as it relates to their transactions. I think that people do have a right to private payments. I think that that's very important, but I think, as Robert said, it should not be confused with complete anonymity at all times for all transaction sizes. So at the DDP, we do not advocate for the deployment of a U.S. digital dollar, but we do encourage research, and we do encourage the United States, as it considers it, to look at a CBDC that would be distributed at the retail level through regulated intermediaries, including the banking system and other fintechs and payments companies, because we do think that that's an important layer between end users, everyday citizens, and the Federal Reserve or other central banks, which would open up potentially more unique privacy implications. So I think the intermediate model, coupled with technologies and smart choices, could enable a private digital dollar. But I think that there's a lot to unpack there.
I have one question. You mentioned, Michael, privacy is control over personal information. That's like a broad definition of what privacy is. What is the difference with anonymity, which is something that it's always discussed? I mean, some people use privacy and anonymity in a very similar manner, but I think they're different. How can we make them different?
Sure. I think anonymity, there's no ability to reveal your information, whether you consent to it being revealed. There's no way to reveal the information if, say, there's a warrant issued for security purposes too. And I do think that sometimes people do confuse anonymity with privacy in the context of retail transactions. There is a belief that cash is completely anonymous, when really it's very private, but only under certain amounts in the United States. There's a $10,000 threshold on reporting it. Below that, it gets closer to anonymity, although there are still serial numbers on each individual bill and other ways of tracking it too. So I think with privacy, it is more of having the control, where if it's anonymity, it's completely masked totally, which may be an option. And that is something for policymakers to decide if, say, for retail CBDC transactions under $10,000 in the United States, do we want that to be completely and utterly anonymous? Do we have the technologies to enable that? And that's ultimately a policymaker choice.
Thank you. That's nice difference. Robert, anything to add? Or we go to the next one?
No, I mean, I think, just briefly, it's a little bit like the difference between, being sick and staying home and telling no one, and being sick and going to see your doctor. And you might have privacy vis-a-vis the doctor because you trust the doctor not to divulge kind of sensitive information, but you don't have anonymity, right? And if I want to be kind of anonymously sick, I tell no one. And it doesn't seem like we need anonymity necessarily if the people who have access to our personal data treat it responsibly, right? And so it feels like the fear is not so much in general just divulging your personal data. It's about what's done with that data, right? And if that data is treated with respect and securely, and it doesn't leak and it isn't used for purposes that we don't consent to it being used for, then we probably sleep quite well at night, right? And so it's about that trade-off. So I think generally it makes sense to talk about privacy, which is what we're doing, rather than anonymity. And to Michael's point, anonymity is really quite hard to get. I mean, even with cash. And the moment someone observes you making a transaction, I guess your anonymity is violated, right? So yeah.
Thank you both for the clarification. Let's go to the next one. What is the current state of affairs regarding privacy in retail digital payments? That means retail CBDC or else. I mean,
sure.
Let's go with Michael. Yep.
Sure. I think currently in digital payments, the state of privacy is insufficient. And I think in many ways, it's actually, people have a lower level of privacy in digital payments than they realize. Often when we discuss retail CBDCs, especially in the US, the idea of a retail CBDC is compared to a hypothetical present where digital transactions are completely private and potentially anonymous if people mix up the two ideas. So, banks know a lot of personal details, and some of which they're required to share with the government, very often for legitimate reasons related to law enforcement, regulations, Bank Secrecy Act, very important. And then apps too. People use apps, different payment-based apps for retail transactions to pay back a friend for dinner. And they actually have a lower level of privacy. There's a report from Consumer Reports recently that outlined actually the current level of privacy with some of these apps and other ways that people pay each other digitally is not nearly as private as people think that they are. I think that it's also, in the retail space, it's just less private than cash. Cash is not perfect. It's not absolutely private or anonymous, but there is currently no substitute for cash in the digital economy. Societies around the world are going cashless, not because of government decree, but because, preferences are changing. Some people see convenience with digital money. The pandemic, made people a little bit more nervous about touching a physical item like cash that other people had touched. And so as this happens, I think that unfortunately we're losing private, secure, safe central bank money as we increasingly turn to online commerce. So I think that the state of affairs for privacy and digital payments is insufficient right now. I do think that there is potential for retail CBDC to be that sort of cash for digital commerce.
Thank you, Michael. Very interesting. Let's go with Robert.
I totally agree, Michael. I think people don't realize the kind of state or surveillance that we're in right now. This kind of, I feel like often people say, well, we want cash-like privacy, things like that. But to me, this feels really like a somewhat fuzzy concept, right? So cash, for example, requires physical co-location. Would we require that too? So you can have, cash-like privacy if you transact with your friend who's sitting next to you, or do we really mean something slightly different? The other kind of challenge with cash is that you can only carry a limited amount of it, and with digital payments, there's no such limit, and so we probably mean, well, up to a certain amount, but then there's amount per transaction. What if I structure my transactions to send a cent every minute? People would probably say, well, that's trying to get around the requirements. But then you suddenly have a situation where you need some way of monitoring whether someone is sending a series of very small payments. And so things, in my view, break down fairly quickly. And the idea of having kind of complete anonymity below a certain amount is quite hard to operationalize. Whereas what you could do is you could say, well, these are the rules, and we do monitor the transactions, but we do so algorithmically. For example, it's not a person who's viewing this. It's simply an algorithm that records how many payments you've sent to a certain destination, and once you've passed a certain threshold, then suddenly there's a reporting requirement. And that maybe fulfills people's desire for privacy. Maybe it's because there's no human viewing it, maybe because it's not possible to use that data for other purposes. And in any case, it seems better than the status quo, which like we both said, I think is quite a lot worse than people realize. Yeah, I think that's, I hope that answers the question.
Yes, it does. It's very interesting to see that what people think right now that they have as privacy, and that they fear that the retail CBDC could be like more invasive and less protective of their privacy. Perhaps it's the other way around, because the retail CBDC, as everyone is like putting their eyes on the privacy, perhaps the retail CBDC at the end will be better, will provide better protection levels of privacy at the end. So that's very interesting. And that's something that we're going to discuss in the next question, and that you already said some things about this, which is that we have heard from the beginning that the retail CBDC is like a form of digital cash. And we have seen that cash is not completely anonymous, not completely private, but we always tend to think that retail CBDCs are like a cash-like privacy. should we expect this? You already said some things about this, but should we expect that the retail CBDC should be cash-like privacy?
Yeah, I don't know if that's the best target to aim at, right? I think it makes sense to really spell out what kind of privacy guarantees we want, rather than cash-like. And again, with cash, for example, I can watch you make transactions in the street as you're, handing bills out. Do we want that kind of ability where, folks can see what you're doing? That seems kind of a bizarre thing to bake in. Same with the physical co-location requirement. Maybe we want to loosen that up and say, no, you can send money to anyone in the world, anyone in your country, whatever it is, up to a certain amount without it triggering any reporting. The other thing is, having some level of monitoring and kind of injection of trust is not like a bad thing per se, right? So knowing that your counterparties are trustworthy is not necessarily bad. It feels like what happens is either there are unintended consequences, right? So we require information from people that they simply don't have, or we exclude people on the basis of information that we collect for kind of unjust reasons. We say someone's high risk, even though they're not, just because they have a certain citizenship or because they're engaged in a certain line of work or whatever it is. And so then we exclude people from the financial system, or we use the data we collect for some other purpose. That's the other kind of failure mode. And so it seems like if we create a system where we minimize the amount of data that's collected, we only use it kind of for narrow purposes, ideally without divulging the underlying data. So, you could imagine a situation where you have a trusted intermediary that looks at, whatever information is needed to issue a credential and say, hey, you're good to go. You can transact up to, say, $10,000 without there being any reporting, and you never need to show anyone else the underlying data. You just kind of show this credential. That might be a better kind of way of handling things. So yeah.
Very interesting, Robert. Michael.
Yeah, I think Robert makes some really excellent points about the limitations for cash, and that why in the retail CBDC landscape there are parts of cash and cash-like privacy where we could emulate for small payments under certain thresholds, potentially domestically, but for cross-border retail CBDC payments, that gets a lot more complicated. The Digital Dollar Project, we're currently in the middle of a pilot with a money transmitter from the United States and a bank in the Philippines, imagining what the remittance process could look like with a retail digital dollar. And I do not imagine that it will be the equivalent of sending cash to someone in another country. It's, the checks, the regulations, the requirements, the cash analogy doesn't necessarily make sense in that context. But for smaller payments, I think that we should expect it, but we should expect a cash-like level of privacy, but we shouldn't think it's guaranteed. I think that if privacy is such a priority for policymakers, for regulators, for lawmakers, I do think that it's important to be engaged in the process from that standpoint, because there are a lot of different balances. Law enforcement will have a different view. I'm not sure how keen governments are on creating a payment tool that can settle instantly and be completely anonymous, no questions asked in any amount. So the expectation of privacy is fair, but I do think that that there's a role for people to push for central bank digital currencies that do potentially enhance privacy. But it's really important to understand where we are right now, where physical cash is right now, and how that relates to CBDC.
That's very interesting, Michael. Thank you, Michael and Robert. The next one is about the technology. Is there a technology that could provide sufficient privacy protection for retail CBDCs? Are those technological solutions available already and they're scalable? Michael.
Sure. Well, I'm admittedly not a technology expert. I think that there are technologies being developed now, and in some cases in use now, that could help eliminate the need for trade-offs between privacy and security. The White House Office of Science and Technology Policy is developing an R&D strategy for digital assets. And one thing the Digital Dollar Project has urged the White House to do is to really put technologies like zero-knowledge proofs, right? Cryptographic protocol that allows one party to prove to another party that they know a certain piece of information without revealing any information about the content of that information, right? That should be front and center in R&D efforts because, with zero-knowledge proofs, there are still questions of scalability. Is it ready for prime time? Similar questions for concepts like homomorphic encryption, multi-party computation. Are these scalable, ready for prime time, rested, and fully tested? And if not, then we need to figure out how to advance these technologies, whether through federal government R&D, complementary private sector initiatives, and where the technology falls short, we need to answer where policy can step in. Right now, I do not think that the question of privacy with retail CBDCs can be solved by technology alone. I think that there may be potential to get there if the right steps are taken, the right investments are made. But until that point, the technology piece cannot be separated from the policy piece. They are one and the same, and both need to be considered.
Thank you, Michael. Robert.
Yeah, I totally agree with the last piece that Michael said. In a sense, talking about technology at this stage is a little bit an exercise of putting the cart before the horse, because we still haven't really decided what problem exactly we want the technology to solve. And I really don't think that there's kind of a silver bullet technology here that's going to magically solve all the problems. And so we need to think carefully about what kind of privacy we want, privacy from whom we want, what are the kind of risk modes that we're worried about. And then once we've decided that, then we can think about what suite of technologies, I doubt it's just one, is going to help us achieve that. And there's lots of research going on at MIT and at other places all over the world, designing these technologies, testing these technologies around scalability. And then there's this other kind of elephant in the room, which is the kind of trust of the technology, right? So we have all sorts of kind of fancy sounding things like homomorphic encryption. But at the end of the day, someone has to actually believe me when I say, hey, we're going to collect this data from you, but it's going to be encrypted, or we're going to collect this data from you, but it's never going to leave your device. Well, how do I know that you're actually doing that? It's a little bit like, how do I know that the voice activated assistant isn't actually listening to me when people tell me it's not? And the reason I believe that, or the reason I might not, is based on trust, right? Trust in the institution that's in charge of administering the technology. And so we need to think quite carefully about who would be in charge of administering these technologies, who is the kind of trusted intermediary that people will inevitably be handing over some data to. And then based off of that, there might be a need for kind of public education around these technologies and explain to folks how they work and what kind of privacy they guarantee and what kind they don't. And I think really the success here is in transparency, and people get quite uncomfortable, I think, when you either don't explain what exactly is going on behind the scenes, or it's so incredibly complicated that people can't hope to understand it. And it feels quite unfair to put the onus on the consumer in that way, right? To say, well, buyer beware, figure out how you're going to deal with your own financial data. So it really feels like there's this need for trust, this need for transparency before, and this need for aligning on priorities, and then we can start talking about the technology.
That's very interesting. I'm going to chip into the conversation with some comment that I saw from one of the attendants, which I think fits very well now. Robert, you were talking about trust, and trust is something which is rather a centralized concept. I mean, you trust a central something like a node in the network. If we're thinking of DeFi, decentralized finance, in which the trust is somewhat a different concept, what is the role of decentralized finance in perhaps, or how can we think about what is the impact of decentralized finance on how we think about retail CBDCs, privacy and trust on the nodes in that chain of services that compose a retail CBDC?
Yeah, it's really a tough question, right? And so we wrote a piece a few weeks ago on, how would you have, I think the title was Justice in a Vacuum, right? Can we have trust and justice in a trustless world, and a world that doesn't have any jurisdictions? And in the end of the day, right, like we engage in all sorts of transactions knowing somewhere in the back of our mind that there's a system of laws that ensures that, if I buy something, I actually get that. And sometimes you can automate that or use technology to guarantee that you're going to get what you buy. Sometimes you can use escrows to make sure that, parties behave in the way that they say they will. But especially when we're talking about physical assets, it's an unsolved problem, right? And the idea of buying a house in a fully decentralized, trustless way is kind of hard to conceive of, right? How do I make sure that I actually get to take ownership of the house? And so I think we need a system of laws. I think it's going to be really challenging to have a financial system that is completely trustless. At the same time, if we can minimize the number of parties that we have to trust. So for example, if we have, one centralized data custodian that is a fiduciary maybe of the people whose data it holds, and that's the kind of one trusted entity that issues a credential, or maybe there's a plurality of these, custodians, and you can pick ones that align with you. But you give your data to them, but beyond that, you have credentials and you don't have to trust others. And that way you can also engage in transactions with, merchants that maybe you don't know whether you should trust them, right? You just know that they can't steal your data. And so then you can engage in transactions with them. It could kind of lower barriers to entry. That seems to be the way to do it. And again, we need kind of some level of regulatory backdrop to ensure that people behave the way we want them to. Yeah.
Thank you, Robert. Any thought about this, Michael?
Sure. I mean, I think the trust is just always central, and I think that getting people to just trust the code, to trust decentralized technology requires education efforts similar to kind of helping, gaining their trust for a CBDC system. I think both face very, whether, you would go down a path of decentralized finance instead of centralized central bank money. I do think that you can't get around the trust question either way. And, even if the technology is trustless, the technology was built to enable two parties who have no reason to trust each other to transact. There are still questions to get people to understand that and truly trust in that. I think trust is at the center of all of this, in my view.
Thank you both. There was some comments that we made at the beginning that the people think that their retail payment instruments are rather private or protect their privacy at least. But we all know that from a legal perspective, a government can issue a request to access transactional data from financial institutions and retail payment systems. We also know that big techs, paytechs, and all financial institutions in the payment ecosystem have access to huge amounts of our data, but perhaps we don't know that, or we don't realize the size of the data that we're sharing. And obviously, everyone tends to share a lot of information when they use Instagram, Facebook, so on and so forth. Is the quest or the request for extreme privacy from a retail CBDC justified or not? Robert.
Yeah, I mean, in this discussion, the answer is a little bit yes and no, but a little bit no, right? So I think have a inflated sense of how much privacy we have, especially when transacting in cash, and maybe also a little bit of an excessive worry that a digital currency, and by the way, a lot of transactions are already digital, right? So it's not like we're moving to a completely different world here. It's a little bit an incremental exercise, but we worry that moving to a digital system would undermine privacy. And really, it might not, right? It could serve as an opportunity to increase privacy, to kind of minimize the amount of data that individuals have to offer up in order to engage with the financial system. But there is likely not a future world where we do away with the need to disclose some information about yourself entirely, right? It's going to be really tough to do that. And I don't know if that's necessarily a better world either, right? It's kind of a chaotic world where the onus would very much be on individuals to figure out who is their counterparty. And I don't think we would want to live in a world where you as an individual have to, due diligence anyone you send money to. Like we ideally want to have a situation where the onus on individuals is minimized. And so, some level of pre-vetting, KYC, whatever we call it, seems like it could be positive, right? And I believe that in the EU, there's, limitations, unlike the US, where there isn't privacy regulation in the same way. In the EU, there's limitations on using data that's collected as part of AML to then, make other business decisions. And that kind of regulation, that kind of framework seems quite appealing to me, to say, okay, we have some applications of this data that are legitimate, and we realize that we need to collect it, but we also realize that it's sensitive data. And so we don't want to create like a carte blanche where you can then use that data for any purpose. So I think a nuanced discussion about privacy and also a kind of user-centric discussion seems appropriate. So going out and understanding what kind of privacy do people want? Who are they concerned about having access to their data? Is it that they're worried about, the government having access and being able to make decisions or, gain insights? Or is it about having private companies have access? And this question about privacy from whom is really quite important. And I think there are cultural differences between the US and Europe about who people are worried about. And so, having that discussion, really understanding what are our objectives, and then proceeding with solutions that include technology seems, like I said earlier, like the best approach.
Thank you, Robert. Michael.
Sure. I think that the quest for, I think you said extreme, Carlos, or a very high level of privacy from retail CBDC, I think it is justified, with the caveat that it needs to be grounded in a little bit of realism. Sometimes you'll hear, especially in the United States, we have some policymakers who have said that, basically a retail CBDC would be a complete surveillance tool, and would be basically the end of financial privacy. And they neglect to mention where we are today with digital payments. They neglect to discuss the policy choices that could be made to enable privacy preserving retail CBDC. And so ultimately, that is unhelpful. I think we need a very, serious conversation that's grounded in what this current status quo is now for digital and physical payments. And we should see if we can get, if that's something we want as a society, whether in the US or Europe or elsewhere, if we want to go beyond the status quo, I think that that's justified. I think that that's okay. I do think that, in order to get, to achieve widespread adoption, there does need to be trust. I think, we talked about trust earlier and the importance of public education. I think that's very important. And I think, one of the issues in the United States is that, when we talk about privacy from whom, it's the government, right? Like, I think that it's fair to say that, at least in the context of the United States, and I'm based in Washington, D.C., so I spend most of my time talking to American policymakers about this. The fear of sharing too much data or the government having access to your personal data trumps fear of banks or financial technology companies having access to your data. So in the United States, it's really a privacy from whom question. And so I do think that this quest is justified, but it needs to be grounded in the reality of what's happening right now. And the idea, retail CBDC should not be compared to a hypothetical present where we, all have complete anonymity for transactions of any amount, whether cross-border or domestic. Obviously a retail CBDC would fall short compared to that, but we need to compare it to what actually is, not what ought to be.
Thank you. That's very interesting, Robert and Michael. Let's go to the next one. Finally, and this is the type of question we always like to use when we are finishing the broadcast. I mean, from my side of the questions. How do you see in 5 years the privacy of retail payments evolving? And how do you think the central banks solve the privacy dilemma of retail CBDCs? Michael.
So I don't think that they'll solve it alone. I think that there is a role for other branches of government, for private sector companies, and for civil liberties organizations too. There's some great advocacy groups in the United States who are really, insistent that we need to solve this privacy dilemma, because CBDCs are coming. 114 countries around the world are exploring CBDCs. I think most of them in the retail context. So I think that central banks, I think that there should be a whole of society, whole of government effort to solving this privacy dilemma, to defining what privacy problems we're actually seeking to solve, what level of privacy we're looking for, on how we can realistically utilize what technologies we have now, and invest in and fund the R&D around technologies that may not be ready for prime time yet. As far as how I see the privacy of retail payments evolving more broadly, I think that the CBDC discussion is really an opportunity to evaluate our level of privacy now and think about it. I think it could be an impetus. The idea that a retail CBDC is uniquely challenging to privacy, while that may not be true, it is also an opportunity to think about, how private we want our payments to be. And I think as the use of physical cash continues to decline, and from, that's not something we at the Digital Dollar Project advocate for. We think of retail CBDC should complement and not replace physical cash. But as physical cash declines, we have to really think about the level of privacy for digital payments, because people may not always accept cash, and it's just unfortunately that seems to be the direction society is moving in. So I think in 5 years we will be at a place with more private retail payments, but there's a lot of work to do to get there.
Thank you, Michael. Robert, what's your view?
Yeah, I agree with a lot of what Michael said, so I'll try to think of some other things to say. So I think on one hand, what I'm really hopeful for is that we create a slightly less obscured, system of financial data collection, where folks know what kind of data is being collected on them, who holds that data, what it's being used for, how to correct that data, if there's mistakes, things like that. And I fear that 5 years is an ambitious timeline, but I'm really quite hopeful. To Michael's point, so many different jurisdictions are working on CBDCs, engaging in these discussions. And even if we don't get to the point where there are kind of universal CBDCs, maybe this discussion is going to bleed over into the kind of traditional finance and payments space, and we kind of improve privacy in that space. And then the other thing that I think is interesting is that we're discussing privacy in a fairly narrow context here, but there's a much larger discussion about privacy in the age of AI and big data, and all of these technologies are kind of fundamentally built on consuming large amounts of data. And I'm hopeful that having the discussion in this context also allows us to think about privacy in other contexts and kind of sharpen the discussion and the requirements around privacy across the board. So I'm quite excited about that and about being involved in those discussions.
Thank you both, Robert and Michael. Now I'm going to turn to the questions from the audience. The first one has to do with something that we have mentioned 2 regions, the US and Euro area, let's call it like this. But we haven't talked about other kinds of regions, and we have discussed this in some other CBDC broadcasts, that, for instance, in Africa and perhaps in Latin America, the privacy is not like a top 3 design option in retail CBDC. Is privacy something which is like jurisdictional dependent? It's very different in cross-section. What do you think, Michael?
I think it is. I think it does depend on jurisdictions. I think in the US, the concern is privacy from the government. In Europe, you might have some more privacy from the private sector. And then in other jurisdictions, they're looking to solve different problems, especially in emerging market economies. They're less concerned, in my view, with privacy and more with financial inclusion, financial stability, and other goals that are at the forefront of why they're exploring retail CBDC. And so it's a different situation, and they're trying to solve different problems, wherein, places like the United States or Europe, or you talk about Sweden in particular, the goal is to replace potentially the declining use of cash, and so then privacy is at top of mind. But if your goal is for financial inclusion to underserved populations who may not have access to the current financial system, I think it's fair to say that privacy is not necessarily a top consideration.
Thank you, Robert.
To that briefly, even though when your primary objective is financial inclusion, privacy isn't maybe the most important consideration. It is linked, right? Because being able to access the financial system right now requires a certain kind of set of data to be available. And in many cases, people just don't have the information needed to be able to access the financial system, right? So, we could reframe the entire discussion we've had so far in terms of financial inclusion and asking the question, well, what kind of data do I need to give up? What kind of data do I need to have available to share in order to access the financial system? And so I think the two discussions are linked. And if we figure out how to minimize the amount of data needed to be collected to give people access, then we also take kind of a significant step towards improving financial inclusion. Yeah.
Good. Let's go to the next one. And this is something that I mentioned at the beginning, so someone was hearing that. What are your thoughts on Florida's Governor Ron DeSantis' ban of the digital dollar from the Florida state for privacy reasons?
Sure, happy to take this one first. I think it's unfortunate to see central bank digital currency become politicized. I think that, the United States, I think the potential benefits of a well-designed digital dollar are too great, and the potential risks of not exploring a digital dollar are also too significant for the United States to not even consider a digital dollar and begin a process of banning it at the state level. We don't weigh in on specific legislation for the digital dollar project, but we do think that this is a very important innovation. CBDCs are happening regardless of what the United States does. I do think that the consideration of a digital dollar should be rooted in empirical research, data, exploration, and a whole of government effort that involves Congress, the Treasury, the President of the United States, and of course, the Federal Reserve. And I do think that to boil it down as a retail CBDC is automatically the end of freedom and should be banned in states throughout the United States. I think that there needs to be a more detailed conversation in the United States. And I'm not advocating for a digital dollar, but what I am saying is I think that it's so important, and it's so important to the United States that there needs to be a thoughtful, long conversation. And I think that it should happen across the country, not just in a handful of states.
Thank you, Michael. Robert.
I totally agree with what Michael said, and we've talked about this kind of throughout, that a CBDC could be bad for privacy if it's designed kind of incorrectly, but it could also really improve the privacy status quo. And so I think that kind of, again, engaging with the kind of privacy discussion and the various technologies that are available and the kind of design possibilities here is important. And then the other piece, which I think Michael also hinted at, is this seems to be coming regardless of what we do. And a future in which folks are using a non-US CBDC for regular transactions, although I think it's unrealistic in the short term, but you could imagine situations where private companies are issuing tokens that can be redeemed in various places that start to kind of look like digital currencies without any sort of privacy control layered on top. That's really like the future that I'm worried about. And similarly, I think, again, less likely in the United States, but possible elsewhere, that individuals in a certain jurisdiction start becoming reliant on a foreign digital currency because it's simply so convenient, and kind of robbing the local central bank of a lot of autonomy and robbing consumer protection agencies of the ability to protect folks. That's kind of a future that I think is problematic. So it behooves us to be thinking about this, and it probably makes sense for countries, and they are, to roll out their own digital currencies lest somebody else does it before them. And then finally, the idea of outlawing things that are fundamentally kind of free floating on the internet and digital in nature, it feels like it's a losing battle. Providing better alternatives rather than trying to outlaw what's out there seems like it's probably going to be more fruitful.
I think that's right. I'll just add to, I agree with Robert. I just want to add to one other point, is that the governor also proposed prohibiting foreign CBDCs to be used in the state of Florida. I agree with Robert. I don't think it's realistic that consumers in the state of Florida will be using other countries' CBDCs on their trip to Disney World, perhaps in the state of Florida. But I do think that the better response from the United States is to engage with global standard setting bodies and to really have a seat at the table in global discussions on CBDC. That is the way to have a proactive role in this future that's happening no matter what. And countries are going to proceed with or without the United States. So I do think that more productive role that's better for U.S. financial and national security is not to just pass these laws to just prohibit foreign digital currencies and to understand how the standards of the future of money are being set, how other countries that are further ahead in CBDC exploration are beginning to shape global norms, especially around cross-border payments. I think, you see Project Enbridge as an example of other countries coming together, and that may be better, regardless of whether the U.S. even deploys a CBDC. That's a better way, I think, to deal with the reality that money is being digitized, that public central bank money is being digitized.
Thank you, Michael and Robert. I have one which is rather related to this one. It says, instead of privacy, does CBDC pose a unique opportunity to reduce current rates of fraud and financial crime? Is this incompatible with enhancing privacy with retail CBDCs?
Yeah, I'll go first quickly. I do think it does have potential, but it needs to be balanced against privacy. And it's a very tough balance to strike because you absolutely do see the potential there. So the question is, how can you achieve both, right? We could create a prototype CBDC that is cash-like within reason for small payments. We've already discussed all the reasons why that's not necessarily the best goal, but just, for brevity's sake, cash-like. But then that does raise risks, and there are legitimate law enforcement reasons to access data with a warrant, and so that it just needs to be balanced, and it's a tricky conversation.
So to answer the second piece, is it incompatible with enhancing privacy? I don't think so. I think we can kind of find better trade-offs. And then the other piece is that the way we've designed kind of fraud prevention and financial crimes enforcement isn't particularly evidence-based. Nor is it kind of aware of the costs that are imposed on individuals and on financial institutions. And so a digital currency could provide the opportunity to really be very evidence-based in how we design interventions and even test things out, right? Test things out, collect data. How many crimes have we been able to identify? How many kind of fraudulent transactions have we surfaced? What is the cost that we've imposed? Is there a more efficient intervention? Knowing that we'll never get to 100%, but trying to be kind of more data-driven in our approach seems like it could be really effective here, rather than kind of coming up with thresholds and then those thresholds, persisting for decades without really knowing to what degree they are effective at preventing the behavior that we're worried about.
Thank you. I'm going to draw the last one, and I have to discard several, which I think that will take a lot of time, but we're going to send them to Robert and Michael afterwards for them to receive them and to be able to answer them if the issuer of the question is still interested in that. The last one is, and this is something that I don't really understand very well, but can we use reverse ATM approach for physical cash to CBDC? I'm wondering, what does it mean? It's like reverse ATM approach.
So I don't know. So you go ahead, Robert.
I'm also not sure. I'm sorry.
I would love to learn more, though. Whoever asked that question, would love to hear from you after this call, because I'm not sure what that means, though.
Okay, that's what I raised it, because I didn't have any idea either. I don't have any idea either. So 2 minutes before the hour, I'm going to give you a lot of thanks, Michael and Robert, for joining us. This has been a very interesting topic. We had a very large audience. I think that the privacy topic, obviously, is always very catchy, and people are obviously very interested on understanding what privacy, anonymity are and how they differ, and to what extent retail CBDC could enhance or could make the privacy issue worse. But one of my biggest takes from this conversation is that perhaps the retail CBDC is going to give us the opportunity to revalue what we know about what we have in digital payments today, and perhaps it's going to be let's not call it a solution, because it's not a solution. That's not the intention, but it will help gaining some new level of privacy for digital transactions. So that's like my take here, and I thank you both for allowing us to have this kind of discussion and conclusions. So thank you everyone for joining. This is the end of the CBDC broadcast number 15. If you want to get in touch with Michael or with Robert, we're going to share their contacts in LinkedIn. Please also have in mind that during April, we're going to have broadcasts with speakers from R3, DTCC, IMF, SEC Alliance, BIS, and the Hong Kong Monetary Authority. And please put into your agenda that May 17 and 19, 2023, we're going to have the Digital Currency Conference in Mexico by the Currency Research, and there are some spaces for your submissions and also for applications for the FinTech Innovation Showcase, and the deadline for nomination and submissions is April 15, 2023. So if you're able to submit for the awards or for the showcase, we know that Currency Research is the right place to do it. So everyone, thank you very much for joining us today. Once again, Robert, Michael, thank you. We hope to have you here once again in the near future. Have a nice day, everyone.
Bye.